Across China's tech sector, the race to build artificial intelligence is rapidly becoming an expensive war of attrition. Developing next-generation models requires massive clusters of specialized chips and the capital to keep them running. The market expectation was that the state-backed big fund would provide the necessary capital for the country's top-tier startups to reach their next phase of growth. Instead, a Hangzhou-based company named DeepSeek closed a 50 billion yuan Chinese A round, pushing its valuation to roughly $59 billion. But the state didn't lead the round. DeepSeek's low-profile founder, Liang Wenfeng, bypassed traditional lead investors and personally injected 20 billion yuan of his own money into the deal. To put that in perspective, a founder paying out of pocket for nearly half of their own company's Series A is almost never seen in the venture capital world. By foregoing the standard path of external funding, Liang signaled he wasn't just looking for capital, he was playing for a different kind of leverage. To see the impact of this 50 billion yuan influx, we have to look at the current hierarchy of China's AI sector. DeepSeek's $59.2 billion valuation moves it past Moonshot AI at $30 billion and Minimax at $17.7 billion. This breaks them from the mid-tier pack, leaving only Zhipu AI's $95 billion valuation ahead. Together, these two occupy a distinct top tier in China's AI landscape. While reaching this level of capital is the goal for most founders, doing so with external money usually requires a trade-off in how the company is run. The standard venture capital model is an exchange. Founders get the cash they need to scale, and in return, they give up company equity and seats on the board of directors. As external investors gain more voting power, they exert pressure to move away from long-term research, pushing for immediate commercial products. Liang's 20 billion yuan self-investment is a mathematical defense. By personally funding half the round, he dilutes the voting power of new external investors before they join the board. This maneuver ensures Liang retains complete strategic control over the company's path. That path is focused on a single goal: artificial general intelligence, the point where AI matches human cognitive capabilities across the board. Liang's choice to use his personal wealth wasn't about the valuation alone. It was a structural move to ensure his AGI research remained independent of typical corporate pressures. In an online meeting with investors last month, the power dynamic was clear. Liang wasn't pitching for their approval, he was setting his own terms. He gave his backers an ultimatum: DeepSeek will strictly limit its work to projects that directly enhance the intelligence of their AI models. He explicitly told investors that the company has no interest in pursuing secondary commercial distractions, the very things that usually drive short-term profits. This leaves DeepSeek in a unique position, a $59 billion company with the structural autonomy to ignore the standard investor demand for a quick pivot to commercialization. By paying for his own Series A, Liang Wenfeng used his personal wealth to secure a level of independence rarely seen in tech. He ensured that one of the most valuable AI startups in China answers to his vision and no one else's.